Good morning and welcome to the start of a brand new week. We are Signal Centre Talking Ball. I'm Joe, joined by Steve and Jamie as always. Good morning, gentlemen. Hope you had a nice weekend.
Yeah, really nice, thank you.
Good. You
It
okay,
was
Jamie?
fun.
He's on
Not
mute.
bad, thank you. Yeah, not bad. Quite a relaxing weekend actually. Saw the family, so had a nice one.
Lovely. Good stuff. Okay, well, let's start off the week by getting through the latest headlines and what's happened over the weekend, just so we're up to speed on the fundamental and news side of things. So, first of all, US consumer confidence dips. The University of Michigan Consumer Confidence Index dipped to 59.1 for May from a previous number of 65.2, which was well below the expectations of 64. It was the weakest reading since late 2011. So, puts into perspective a little bit more about where we are at the moment with data coming out like that. Wall Street, however, did rally. There was further choppy trading on Friday, but US equities were able to hold on to significant gains, but there was an element of short covering associated with that. We had the Nasdaq rebound by 3.8%. In terms of what's going on with China, we saw the industrial production number decline 2.9% in the year to April, compared with expectations of a 0.4% increase. We also see retail sales declined 11.1% over the year after a 3.5% retreat in the previous month. In terms of overall risk appetite, that continues to remain fragile despite the rally that we saw on Friday, obviously backed up further by this weaker data coming out of China. We've seen the euro attempt to rally. It did manage to hold just above 2017 lows on the euro versus the dollar. We've seen a pretty decent performance from the euro against sterling in recent weeks, and we've seen further speculators selling sterling over the last few weeks. The CFTC data that came in last week recorded a further increase in short non-commercial sterling positions to near 80,000 contracts, which is up from the previous week of 74,000 contracts. So that's the largest short position since September 2019, according to the data. So that is that on the news. Let's get into the charts. Steve, do you want to kick us off today?
Yeah, sure. I can take a look at cryptocurrency because we're all really interested in that. Obviously, weekly chart continues to look pretty glum for the Bitcoin at the moment. We've seen 1, 2, 3, 4, 5, 6, 7, 8. Well, we're in the 8th negative week. We've started off on the back foot already this week. A high of 31,275. Didn't hold that for very long, and we're now trading below the 30,000 level. Obviously, for me, we haven't had a close yet below this 28,800. So that's one positive. We saw a nice rally into the weekend. We can take a look at it from the daily chart, and we can see from Friday, Saturday, and Sunday, we had this corrective rally after Thursday's bullish hammer candle. So I highlighted last week that 33,000 for me would be a key resistance level. We haven't really got close to that, and at the moment we're looking, there is a danger of engulfing yesterday's positive price action. So straight away on the back foot, we can see down 5%, just over 5% on Bitcoin. Ethereum is down 6.5%. Again, we're seeing this negativity creeping in across the board. Ripple, same, bearish engulfing candles, and a lot of it down to what happened with the Terra Luna last week, which still remains pretty much worthless. So from there, we'll pop across to commodities. Oh, let's have a look at my commodities, and we've seen a little bit of a pullback in gold. We did get a dip. We got a dip down to the 1800 level. Now that's just a nice psychological level for gold traders, 1800. And we've seen a little bit of a bounce on that, but obviously from last week's price action is really negative. We've seen the prices move down through the upward trending support line, and that was came in at around 1850. We mentioned last week, if that breaks, then good potential on the downside to target the 1780 to 85 support level, and we're on our way there at the moment. So looking back over the daily chart, we can see this band of support has been pushed through to the downside, and now we're looking at levels that we haven't seen, or we're targeting levels that we haven't seen since the start of the year. So 28th of January, the low there was 1780. For me, that's a prime target. If we manage to break that as well, 1750 would be the next support after that, before 1722 comes into sight, and even 1680. Now that would be the real. Let's get some fibs on as well. That'll be the real test of the buyer's interest in gold. If we take a look at Fibonacci from that low point there, 78.6 and 61.8 are the levels really that I'm interested in, and we're through the 61.8 support level, so really looks to be heading further south. A strong dollar obviously impacts on that as well. Now, oil had a really decent move higher last week. We can see this on the weekly chart. We were in this channel formation that we'd created from the highs, the multi-year highs that we hit at 126.30 on WTI crude oil. We've had a nice retracement down, and it may not be over this retracement, but we are seeing signs that the buyers are coming back into the market, and we've got a nice little trend line building to really sort of like give us a level to watch on the downside. Something like that really will be significant support. 92.20 to 92.50 is the key level to break below there, and we will be having that ABC correction that we tend to get at the top of a dominant trend. So if we look at this from the lows that we saw way back, if we remember those when prices went negative on the physical oil, from $10 all the way up to, as I say, 126.30, and expecting really a retracement of some sorts. So
do you not think that's a bull flag?
Yeah, it's sort of a bull flag. It looks like a bull flag, I suppose, because I've drawn it in there, but that's a potential bull flag in my eyes. If we look at Fibonacci or Elliott wave, then it has that potential. This could be still the third wave higher. I have sort of like gone with that. This still could be potentially at the top of the fifth wave, and I don't feel, if it is the top of the fifth wave, I don't feel we've had a decent enough correction to sort of like start to extend higher. But we are really sort of like pushing this 110 level. 110 and 115 in my eyes are the resistance levels to watch. If we manage to break above 115, then yes, this could be still the third wave, and we've got higher prices to come in oil. Doesn't look good really, does it? So no wonder the US are struggling with that sort of consumer confidence.
Yeah, sure. Lovely, Steve. Thank you. Is that it from you today?
Yeah, that's me. Yep.
Superb. Okay. Let's have a quick look at FX then. So no surprises that the dollar index is still going super strong. We saw a bit of a reversal last week on Friday, but nothing to be overly concerned about. We didn't engulf any of the previous day's sessions, so we're still stubbornly remaining high on this as things stand, and no signs of slowing. If you take a look at Euro US dollar, that continues to trade around these lows at 103.40. The breakdown last week through 104.70 was quite a key one. So I think any rallies in the short term are likely to be capped at that level, maybe as high as 105.00. But overall still looks pretty sick, as you'd expect, having looked at the strength that we just saw on the dollar index. If we take a look at cable, no slowing at the moment on this, although we did see a little bit of an engulfing candle posted on Friday, so a little bit of an attempt at a move higher, but there was no follow through on that so far today, and in fact we did have a little bit of a push higher, but now have turned negative on the session by 0.3%. Still eyeing up this 78.6% fib level at 120.25 on the downside. Euro sterling catching my eye, actually. Nice little inverse head and shoulders setup here on the daily chart. We saw a decent break to the upside, although I am a little bit concerned about this candle here. A big bearish outside day candle formed on the 12th of May. But if we look at where the pullback has stopped, it's arguably into this support level here at 84.67. It has overshot what is technically the neckline of the inverse head and shoulders pattern, but sometimes that can happen. But that looks quite interesting for me. Maybe signs that we're actually going to get a continuation higher. The measured move of the inverse head and shoulders is up here at 88.23. So bear that in mind if you are looking at some euro strength versus sterling. That's it on the currencies for today. Let's just flip over to the indices and take a look at some of those. So DAX rallied into downtrend resistance. Decent uplift from the 61.8% fib level at 13,385, but looks as though it's rallied yet again into this downtrend resistance line. It's been pretty reliable so far, and already today we've seen a decent move to the upside being rejected quite early on, and it looks as though we are turning lower. If we take a look at the FTSE 100, we can see that had a really strong move to the upside on Friday, but trying to give a little bit of that back so far today. Still very choppy overall, and quite difficult to trade. Nothing new there with the FTSE. Take a look at the Nasdaq. We saw there was a decent reversal on that on Friday, but we are already turning negative, down by 0.8%. Pressure still remains on the downside. Really large sort of top pattern appears to have formed here, although we did see the market do a decent job at this 50% fib level. So that's the key support that needs to be broken before we can expect further downside. Finally, going to take a look at the S&P. I've got a head and shoulders top drawn on here. So this is the left shoulder over here. We've got the head up here, and we've got the right shoulder here. So this is a downward sloping head and shoulders top, which are tend to be the sort of more aggressive ones when they do get going. So if we look at what we've seen here, we've seen a break below the downward sloping neckline there on the 9th of May. We saw prices extend lower towards 3,860, but in the last 2 days we've seen a rally to retest that neckline. On Friday the buying didn't get above it, and already today we've seen a bit of a rejection there, so that could be a decent opportunity to sell. In terms of the measured move target on the S&P 500, we're looking at a move down to all the threes, 33.33, which would signify a pretty lumpy drop in the market. What is that in a percentage? Another 16%, which wouldn't be very pleasant at all for those buyers of the US market. What is that in total? We're talking about potentially a 30% drop in total from the S&P 500 from the highs.
It sounds reasonable.
Yeah, it's actually probably more than that. Yeah, I mean, in the grand scheme of things, it's not terrible, is it? But how many people are involved in the market up here and just been buying it and don't know what to do?
Yeah, I think it's very much like cryptos, isn't it? It's bought at the highs, and but maybe there's a few more seasoned investors in the S&Ps, but still sort of facing the same situation.
Yeah, maybe. Yeah, it's talking almost a 31% drop if we complete that measured move target from the head and shoulders.
Nice.
Yeah, sorry,
Unless
a bit of a
you
doom and
hold
gloom start
S&Ps.
to the week. Yeah. Jamie, do you want to talk through some stocks? I don't think you're going to make it any easier for us, are you?
No, I don't think I am. I'll tell you what, let's go to the biggest gainer and loser, and then we'll jump into a bit of an analysis on some of the
Just
other
focus
stocks.
on the biggest gainer for a little while.
I'll tell you what, let's start
to give everyone a little bit of hope.
A bit of exactly, a bit of hope. We're looking at Veru here, which is a pharmaceutical company which was up 43.96% on Friday. A lot of these pharmaceutical stocks are really volatile, aren't they? So just one of those kind of crazy moves. That's enough on the happiness.
Yeah.
We're going Figs. Figs was down 24.98%, so almost 25% on earnings. Only got data from 27th of May. So if that was the IPO, which it may well have been, it's not done so well since then. IPO looks like about $30 and down to $9 now, which isn't so good. But I guess we can kind of see there was some happiness last week. If you look on the right side here, we've got a lot of green and a lot of decent percentage moves as well, which kind of saved the week, because the week, I think we discussed on Friday that if it had ended on a bad foot, that would have put a lot of stocks breaking through key zones in the market. But Friday did rally and it did kind of save what looked like a very bad week. I'm still not convinced that things are going to get much better in the short-term future, but we will see. Starting off with Apple. Now, Apple touched this level we had drawn out, this previous support level from back in October of 2021, which was a resistance level at the start of the year as well. Formed this doji candle and then gapped up. So that hit that pretty much, had this previously drew on. So that was quite a nice level we saw there with Apple. You could expect to see maybe a bit more buy. I mean, this is quite a bullish shine at the support level as well. So maybe Apple buys up a little bit more this week. I still wouldn't be particularly excited about it going reaching the all-time highs, which we've already seen, because I just think there's a bit of a sickness generally in the market. As we will get on to see. Airbnb, I wanted to check out. We had this nice, if we look at a weekly chart, this nice channel since the IPO. It broke through that and closed through that last week on some decent volume as well. So that's not looking so good for Airbnb. And if we take a measured move, and I'm a little bit skeptical when we do this, but take a measured move of the length of the channel, extrapolate it out, we're looking to hit possibly $80 according to that. But so yeah, be very careful. That's you can see the support held really well on the IPO, just after the IPO, held again. Now it broke through. So it was tested 4 times before it broke through last week. So that's a very bearish sign for Airbnb. Disney, I wanted to have a look at because it held this 78.6 fib that we'd had drawn out previously. It looked like it was going to struggle, but the last day of the week actually saved it after earnings. We gapped up from this hammer type candle and closed higher on, not higher on the week, but we ended up forming this quite bullish candle. We've got this at the 78.6 fib, as I say. So that was quite an important close there for Disney. What else we got looked at here? Microsoft closed on a slightly worse foot, actually. We had this head and shoulder pattern drawn out. There was actually a second head and shoulders in the right shoulder, as we discussed last week, but this couldn't regain the losses of the week. And if I remove some of the clutter from the chart, you can see that it closed through this, what was a support level, and it's now becoming a resistance level. So if we take the measured move for this, we take the top of the head down to the neckline, which, let me just try and draw this a bit better. So this is a downward sloping head and shoulders, something like that. So we'll take the head to the neckline. It's only a bit of a rough guide, this. I'm not too convinced with just drawing up patterns like this, but according to this measured move, we could be seeing a move back into this previous resistance, which will now be support at about 225 for Microsoft. So there's definitely scope to move lower. And we have had this huge bull run on Microsoft. If we zoom out, we can go to a monthly chart here. Ever since the global financial crash back in 2008, 2009, it's pretty much been one way. Until now, this is like the real first time we've seen even COVID, which really gets lost in the weeds a bit on Microsoft. But this is the first real topping pattern I feel we've seen for quite a while. So, and I mean, how long have we got left of the month? We're halfway through. So this could be quite a significant monthly close, if we can't gain back above that 270. That would be the first time. You can kind of, let me zoom this in a bit more. This is a monthly chart, as I say, and we've wicked, and then it looks like we might close through on this 5th month here. So that would be a very significant monthly close for Microsoft. And we will see, we'll keep a close eye on that over the next couple of weeks, I think.
And that measured move target is about 20% as well. I mean, I know Joe was talking about 30% on the S&Ps, but if you're getting
from
Microsoft...
the highs, it was another 16% from the actual top.
Oh, right,
where
okay.
it is now down to the target.
Yeah, it seems like a reasonable retracement.
It's a similar pattern, isn't it? To the
Yeah.
S&P. It's a down. It's got a downward
really
sloping
is.
neckline.
Yeah. And I mean that seems like quite a big sell-off. What we're saying, would you say 225? Did we?
Yeah.
Yeah. So it's 35% from the highs. I mean, that
Yeah.
in the grand scheme of things isn't completely unreasonable. But at the moment, it's probably seemed like quite a big deal to a lot of people, and it is. It is, to be fair. We'll jump
Yeah.
into a couple more before we move back. We've got Nvidia here again, holding the 61.8 fib this time from the COVID lows to the all-time highs, forming quite a bullish candle again at this previous resistance level. As I say, the last couple of days of the week, well, the last day really was the savior, because if this green candle we have here closed closer to the 61.8 fib, even below it, it looks very different on a weekly chart. If we close at the 61.8 fib, it's kind of closing at the lows of the week. So that last Friday has really saved a lot of these stocks from a really bad technical week. We'll take a quick look at Tesla and then one look at Twitter, and then we'll move. But Tesla, this is one we actually put out on, I think, Thursday or Friday as an idea. We had this drawn up from the recent lows. We had a 78.6 fib, which coincided with this previous level of resistance and support. And we actually did get filled on this, I believe. So we had a nice gap up at the end of the week. So we're going to hope for a bit more of a bullish start to the week. But I'm not convinced there's much follow through here. But we'll have to see. You never know what can happen in the markets. Last but not least, Twitter gapped down at the end of the week, right back into this previous support resistance and closed right at that level. So I thought that was quite a nice technical finish. You know, these stocks can often gravitate towards these key support and resistance levels. And this one, I actually just checked this morning. I had this level drawn up and I saw that just randomly closed there, which quite often can happen. So that's why it's important to keep these levels marked on your chart so you can see when price is close, because it usually interacts with it, and yeah, it can use it as support resistance. So we'll finish on Twitter there for this week. But to summarize, we did have a bit of a rally on Friday, but I'm not overly convinced still. I need to see a bit more from a lot of these stocks before I change my mind to a more bullish one at this stage.
Nice one. Thanks, Jamie.
Cool. Okay, gun to the head trade. So every time we do these videos, we also pick 3 live trades on the video. Each of us must pick an idea with a stop and a target. All the ideas are placed in market and they're published directly to our TradingView profile. So if anybody wants to check those out, please feel free to do so. The ideas will expire at 9 p.m. UK time, or when the stop or the target is hit, and we continually keep track of the performance of these ideas over time. So Friday wasn't a great day for us. We were all, I think, caught out by the fact that there was a bit of a risk off rally in markets. So we had 3 trades, which you'll be able to check on the TradingView profile. Sorry, this is a big old spreadsheet now. So I went short of dollar yen, got stopped out. Steve went short of oil, got stopped out, and Jamie went short of Litecoin and got stopped out. So not a great way to end the week, but all in all, it was a pretty good one. So let's get back on the horse.
Yeah,
I've got one ready. Should I go?
Yeah, you go, mate.
go for it, Joe.
Okay,
Yeah.
so I'm looking at this S&P 500. I've actually already published it to TradingView.
Oh,
So
look at
this was
that.
the daily chart that I was looking at on the S&P 500 when I went through my analysis a moment ago. And from what I can see, there's been a breakdown of this downward sloping head and shoulders, and that happened there on the 5th. Sorry, it's not the 5th. That's the 9th of May. And in recent sessions, we saw a bit of follow through, followed by a retest, which we're seeing today. So I've published this. I've published it on the daily chart, and I've got some annotations on there as well. But if we just sort of dive into the intraday chart to see the actual trade idea itself. So selling at 39.89, stop loss above this swing high here that we posted at midnight overnight at 40.47, and a target down at 38.60. So just again targeting these swing lows here from the 12th of May. But ultimately, I think there could be much more on offer here, but obviously we've only got an intraday time frame to work with, which is why I've got the parameters set that I have. So looking for 2.24R on that one today.
Okay,
Who's
nice
next?
one, I'm ready to go if you
Go on
are
in.
not, Jamie. Nasdaq, I'm just same sort of feeling. Obviously, we're talking about the tech stocks now. If we look at the 4-hour chart, there is a little bit of a potential for a reversal. It's setting up quite nicely, but looking at this left shoulder, the neckline here, head, neckline, looking for the right shoulder. So there may be a little bit more potential on the downside. As we've all said, Friday finished quite strongly. However, I'm not convinced by either. Now, if we look at the hourly chart, so the 4-hour chart, obviously, we've got a bearish engulfing candle on there, and we can see this a little bit more clearly as well. This has been backed up by negative price action on the hourly chart. Got a key level of support at 12.21. So I'm going to sell this here at 12,252, is it? Something like that. And I'm going to target move back down. I can bring my tidy my stop in. Well, I suppose that'll do, Donkey. I can, let's just get it right. 4.5 to 1 risk reward. So I'm selling Nasdaq at 12,263, targeting a move to 11,744, which is back down where the support we bounced from, and the stop is at 12,379. That's my trade. Going to trade idea.
Good luck,
Lovely,
Steve.
Jamie. Over to you.
Thank you. So I'm also taking a look at an indice today, but I'm looking at CAC, so the French stocks. We've had this move down, like we have in a lot of the indices. We've had a bit of a retracement up to this 50% fib that I've got drawn here, and I've seen this bearish outside candle on the 4-hour chart. So I'm hoping for a bit of follow through on this on the downside. I can actually get in a little bit better here and move my stop a bit higher. So I'm going to look to sell this at current price, which is 63.14. So let me just change that so I'm being fair. 63.14. I'm going to keep my take profit down at the swing lows. So that is at 60.24. And my stop loss just above the bearish outside candle we saw at 64.03. This gives us quite a nice 3.626 risk reward move. So I'm going to hope for a bit more of a sell-off on the indices today.
As are we all, Jamie. 3 trade ideas, 3 selling positions in indices. So we've got S&P 500, Nasdaq, and CAC. So obviously, if you want to follow those, feel free to do so. But we do effectively make these up on the spot with just a very limited amount of information. So please do be careful if you are following the ideas. In terms of what we can expect from the day ahead, just to round up today's video. Later today, we've got the US New York Empire Manufacturing Survey, which is due out at 1:30 UK time. At 3:15 UK time, we have a Bank of England Treasury Select Committee testimony. And then early in the morning tomorrow, prior to our video at 7 o'clock, we have the UK labour market report. So that could potentially impact anything linked to sterling. Over the rest of the week, we've got a few key events. Tomorrow, we've got US retail sales. We've also got Fed Chair Powell speaking tomorrow as well. On the 18th, we've got US consumer prices. So that'll be the latest inflation reading for the UK. And then towards the end of the week, we've got the Australian labour market report. So a few bits to keep us interested this week. Okay, gents, anything else to add, or shall we wrap it up there for Monday?
Yeah, wrap it up.
All right, cool. Have a great day, everybody. We'll see you tomorrow.
Cheers.
Bye-bye.